So one other aspect of point 5 is that RBI's Monetary Policy Committee has changed its stance from calibrated tightening to neutral in February 2019 and to accommodative from June 2019 onwards. Accordingly, the policy rate has been reduced by 135 BPS since February 2019. However, I'm glad to say that in the recent announcement, the RBI not just looked at monetary policy as an instrument, because monetary policy has its own limitations. The marginal or the incremental benefit now we are getting globally that is the impact, marginal or the incremental benefit that we're getting out of monetary policy is now plateauing, and therefore our central bank, much to their credit, I like to recognize this fact, has come out with very creative solutions so that the economy is driven towards growth, not just observing inflation, but also enabling growth. And for that, the 4 things that the Reserve Bank of India did a couple of days ago are of great importance. The cash reserve ratio, sir, which is a requirement on deposits used for lending to auto and housing sectors, are waived so as to bring down the cost of credit. This is a step which Reserve Bank of India has taken, aiming at pushing the economy towards greater growth. Second step they took is one-time restructuring of loans to MSMEs and allowing construction sector a 1-year time to start operations after receiving the loan. Again, a positive step towards pushing the economy further towards better, speedier growth. Third, sir, long-term repo rates up to 1 trillion, which is 1 lakh crore, in 1 to 3 year window to be introduced so that banks can avail of it from the RBI itself to ensure adequacy of funds to banks in the medium term. So I'd like to elaborate on this point a bit. Most often, we have a problem, and we really are facing a situation where there is a lot of liquidity available in the country, with the banks, in the economy. But that liquidity doesn't seem to flow further to reach those people who want the credit. As a result, we were confounded with this issue of there is liquidity, but actually it's not reaching people who want it. Therefore, this step which is being taken by the Reserve Bank, for whatever compulsions that the bank do not want to give the liquidity further, they've now made a provision so that at policy rate, which is far lesser than the repo, at policy rate, the banks can even borrow from the Reserve Bank and lend further at an affordable rate. It's a very creative step, and I'm really glad that the liquidity movement, not waiting for the banks to reset their books, will now be further enabled. And finally, the repo rate remains unchanged at 5.15%. So with the RBI also, along with the government taking steps towards promoting growth, I'm sure the green shoots and this together will help our economy to move further. So in order to enable housing and infrastructure projects, the government has proposed to establish an organization, Credit Enhancement for Infrastructure and Housing Projects. So we have now come up with a further benchmarking, which the Reserve Bank has also enabled, so that banks will have to price their interest rates accordingly so that they can move towards better funding of government, MSME and other projects.